Assalamualaikum warahmatullahi wabarakatuh. My name is Muhammad Aditya Ramadhan, and I'm here to explain management accounting from chapter 1 to chapter 6. Chapter 1, Introduction to Management Accounting. Management Accounting Information System. What is Management Accounting Information System? Is a tool used to collect, process, and present accounting information relevant to manager for decision making. The system is designed to provide timely and accurate information, which is crucial in a dynamic business environment. What is the main function? The first is data collection, gathering data from various sources including financial transaction, operational report, and market information. Data processing, transforming raw data into usable information, including cost analysis, budget prediction, and performance report. The third is information presentation, presenting information in an easily understandable format, such as graph, table, and summary reports, so that managers can quickly make informed decisions. What is the component? What is the system component? The first is input, data collected from various sources, including accounting system, operational reports, and market surveys. What is the process? Process is processing data through statistical analysis, cost calculation, and performance evaluation. Output, reports and relevant information such as income statement, balance sheet, and variance analysis, used for decision making. Yes. Information needs of manager and the user. Managers require information for planning, controlling, and evaluating organizational performance. They use this information to make strategic and operational decisions. The management process. There are three main activities in the management process. The first is planning. The planning process involves setting short-term and long-term goals and developing strategies to achieve them. Managers use accounting information to formulate budget and financial projection. The second is controlling. Controlling involves monitoring the execution of plan and using performance reports to evaluate results with budgets and take corrective action if necessary. And the third is decision making. Decision making involves analyzing information to choose the best alternative. Managers use accounting data to evaluate various options and make decisions that support organization goals. Okay. Organization type. There are three types of organization. The first is for-profit companies, second is non-profit organization, and third is government agency. Management accounting and financial accounting. What is the key difference? Management accounting provide information for internal user, which is manager, to assess in planning, controlling, and decision making. Financial accounting provides information for external user or investor creditors to evaluate the performance and financial position of the company. Regulation. Management accounting is not regulated by standard, more flexibility. While financial accounting, they are regulated by strict accounting standards such as GAAP or FRS. Okay, I think that's it for chapter 1. Chapter 2 is basic management accounting concept. Cost management, which is direct tracing, driver tracing, and allocation. The definition of those is cost assignment. The process of assigning cost to cost objects, which can be product, services, and department. Second is direct tracing, which is involved directly or linking cost to specific cost object. For example, the cost of wood used in furniture production can be traced directly to the furniture itself. The third is driver tracing. Assign costs based on the activities that drive costs. For instance, the cost of machines that use per hour. Allocation involves distribution and direct cost to cost object based on predetermined rate. For example, factory overhead costs may be allocated based on labor hour. Cost. Definition of cost. Cost is defined as a monetary value sacrificed to acquire goods or services that are expected to provide future benefits. There are three types of costs. The first is fixed costs. Costs that remain constant in total regardless of the level of production or sales, such as rent and salaries. Variable costs, costs that change in total in direct proportion to change in the level of production or sales, such as raw materials. The third is mixed costs, costs that contain both fixed and variable components, such as utility bill that has a base charge plus a variable charge based on usage. Cost object. Definition of cost objects are anything for which a separate measurement of cost is desired. This can include product, services, project, or department. The importance of identifying cost object is to understanding cost object help manager determine profitability, set prices, and make informed decision about resource allocation. Different costs for different purposes. Cost classification. Costs can be classified differently depending on the purpose of the analysis. For example, there are product costs, and period costs. The fifth is product cost and external financial reporting. The definition of product cost is costs that are capitalized as inventory on the balance sheet until the product is sold, at which point they are expensed as cost of goods sold. Impacts on financial statement. Accurate classification of product cost is crucial for financial reporting as it affects the income statement and balance sheets. Type of management accounting system. There are three types, which is job order costing, used when products are manufactured based on specific customer order. Second is process costing, used for mass production of similar product where costs are averaged over all units produced. And third is activity-based costing, which is ABC, allocates overhead costs, providing more accurate product costing. That's it for chapter 2. Chapter 3 is activity cost behavior. The basic of cost behavior. What is the definition of cost behavior? It refers to how costs change in relation to change in business activity level. Importance of understanding cost behavior is that it helps manager predict how costs will change varying level of production or sales, aiding in budgeting and decision making. Fixed costs. Characteristic of fixed costs. Fixed costs remain constant in total regardless of production level within a relevant range. Example include rent, salaries, and insurance. Implication for management is that understanding fixed costs is crucial for break-even analysis and long-term financial planning. Variable costs. Characteristic of variable cost is that it changes in total in direct proportion to change in production level. Example include raw materials and direct labor costs. Implication for management. Variable costs are important for pricing decisions and cost control. Mixed costs. Definition of mixed costs is that costs that contain both fixed and variable component. Example is utility bill that has a fixed monthly charge plus a variable change based on usage. Importance of separating mixed costs is that understanding the fixed and variable component help in accurate budgeting and forecasting. Methods for separating mixed costs. The first is high-low method. Use the highest and lowest activity level to estimate fixed and variable costs. The second is scatter plot method. Graph data points to visually assess the relationship between cost and activity level. The third is least square model, a statistical approach that uses regression analysis to determine the best fitting line through a set of data points. This method provides a more accurate estimate of fixed and variable costs by minimizing the sum of the square of the differences between observed and predicted value. Evaluating the reliability of cost equation. Importance of reliability is a reliable cost equation is essential for accurate budgeting and forecasting. Managers need to ensure that the cost behavior model reflects actual costs. Factor affecting reliability is first is historical data quality and second is change in operation. Multiple regression is assessing cost behavior. Definition of multiple regression is a statistical technique that uses multiple independent variables to predict the value of a dependent variable. In cost behavior analysis, it helps in understanding how various factors influence costs. The benefits it provides a more comprehensive view of cost behavior, allowing for better decision making and resource allocation. That's it for chapter 3. Chapter 4 Activity-Based Product Costing, or ABC. The definition is that a costing method that assigns overhead and indirect costs to specific activities related to production rather than spreading costs evenly across all products. The purpose is to provide more accurate product costing and enhance decision making by identifying the true cost of activities involved in production. The benefits of ABC. The first is improve cost accuracy. By linking costs to specific activities, ABC provides a more accurate picture of product costs, leading to better pricing decisions. The second is enhanced decision making. The third is better understanding of profitability. Implementing ABC. The step for implementation. The first is identified activities. Determine activities involved in the production process. And second is assign costs to activities. Third is determine cost driver. Fourth is calculate product costs. And the last is challenge in implementation. Comparison with traditional costing. Traditional costing allocates overhead costs based on a single cost driver, such as direct labor hour or machine hour, which can lead to inaccurate product costing. ABC versus traditional costing. ABC provides a more nuanced view of cost by considering multiple cost drivers, while traditional costing may oversimplify cost allocation. ABC is particularly beneficial in complex environment with diverse products and services. Limitation of ABC. The first is cost of implementation. Implementing ABC can be expensive and time-consuming, requiring significant resources for data collection and analysis. The second is complexity. The complexity of the system may lead to difficulties in understanding and maintaining the ABC model. The third is not suitable for all organizations. Smaller organizations with similar cost structure may find traditional costing methods more practical. That's it for Chapter 4. Chapter 5, Activity-Based Management, or ABM. Definition is a management approach that uses activity-based costing information to improve decision-making and enhance organizational performance. The purpose is to focus on managing activities to reduce costs and improve value to customers. Key component of ABM. The first is cost management, identifying and managing costs associated with activities to enhance profitability. The second is performance measurement, using activity-based metrics to evaluate the efficiency and effectiveness of activities. The third is continuous improvement. Benefits of ABM. The first is enhanced decision making. The second is increased efficiency. And the third is improved customer value. Implementing ABM. The step for implementation. The first is identify key activities. Determine the critical activities that contribute to organization value chain. The second is analyze cost and performance. Use activity-based costing data to analyze the cost associated with activity and assess their performance. The third is set performance target. Establish benchmark and performance target for each activity to drive improvement. The fourth is monitor and adjust. Continuously monitor performance against target and make adjustments as necessary to improve efficiency and effectiveness. Challenge in the implementation is that it's resistant to change. Employee may resist change to establish processes and practice. The second is data collection. Gathering accurate data on activities can be time-consuming and complex. The third is training needs. Employee may require training to understand and effectively use ABM principle. The role of technology in ABM. The first is data analytics. Advanced data analytic tools can help organizations collect and analyze activity data more efficiently. The second is software solution. Specialized software can facilitate the implementation of BM by automating data collection and reporting process. And that's it for chapter 5. And the last is chapter 6, job order and process costing. Job order costing is a costing method used when products are manufactured based on specific customer order. Costs are assigned to individual job or batch. The characteristic is that each job is unique, requiring separate tracking of costs, commonly used in industries such as construction, custom manufacturing, and professional services. The process costing. Definition: a costing method used for mass production of similar product, where costs are averaged over all units produced during a specific period. Characteristics used in industries such as chemical, textile, and food processing. Cost flow in job order costing. Flow of cost is cost flow from raw material to work in process or WIP and then to finish goals. Third is cost flow in process costing. Flow of cost is cost flow through various departments or processes with costs accumulated for each department. At the end of the accounting period, total costs are divided by the number of units produced to determine the cost per unit. Departmental cost sheet is used to track costs for each department, allowing for the calculation of total cost and per unit cost. Comparison of job order and process costing. Job order costing is best suited for customized products and services. Costs are tracked by individual jobs, leading to more detailed cost information, while process costing is best suited for homogeneous products produced in large quantities. Costs are averaged over all units, leading to similar cost tracking but less detailed information about individual units. Choosing the right costing method. The factor to consider is the nature of products or services, which is customized versus standardized. The second is production volume. Low volume with high customization versus high volume with low customization. And then the third is management need for detailed cost information. More detail for job order costing, less detail for process costing. Okay, that's it for the summarize of chapter 1 through chapter 6. Thank you very much. Assalamualaikum warahmatullahi wabarakatuh.